So where do bridge loans fit into your portfolio in 2022? What you're going to find out is you're going to need more bridge lending, and here's why. What we're finding in 2022 is all the money sources are tightening. Banks are stopping to lend. Hedge funds are asking for more money in. They're actually asking for their money back. There's a lot of ways that we see people reaching out to us and asking us a bridge loan, how to get out of hard money, how to get this property before my property is sold because it's taken longer to sell, or how do I buy a property that I really want now and I'm not even ready to sell the other ones. That's what we're going to go through today, and actually even who are the lenders who are lending on this. So the number one thing that we see that most people are reaching out to us for is how do you refinance a hard money loan when your lender is looking for their money back. When you're refinancing a hard money loan, a lot of hard money lenders are not giving those extensions. They're maybe looking for projects to move, so they're asking for you to get out. So you need a bridge loan out of a hard money. What you need to understand in this market is typically what you're going to be limited to is 65% of the after repair value. Most lenders are looking to lower their risk in these markets. So they're going to limit you. If you could prove or show that you're still under budget or 65% will work, there's a lot of different options out there. There's the Athises, there's the hard money lenders, and even some of the hedge funds are lending right now. Bridge loans are very popular, but they are limiting to that 65%. If you are at 65% or above, you may have to bring in like a gap funder, someone with some real OPM, to fill that gap so you could get a bridge loan, like I said, from a hard money lender, from one of the hedge funds, or really just someone who you know who's lending money. We call it real OPM. Bridge loans are also being used heavily right now for finding new properties when your other property's taking longer on the market, or actually longer to get to the market. So what we're seeing, instead of homes selling in 2 or 3 days, now it's taking 2 or 3 months, sometimes even longer depending on the size of the house and where it's at. So if you have a new deal you want to purchase because it's a great deal, but your other property and all your capital is tied up in the property that's on the market or coming to the market, what you really need is a bridge loan there. What the bridge loan will do is it'll help you buy your new property with a lien there, and it'll also put a lien on your property that you're about to sell. That'll give you all the equity you need to purchase your new transaction by using both properties. And when you're looking for something like that, cost is important. So you want to find a lender that's going to charge you less points, even a higher interest rate, over maybe charging half a point to a point, over someone who's going to charge you 2 or 3 points for a loan that's going to pay off as soon as the other transaction is done. Make sure you shop around, find out who's actually doing bridge loans, who can do it quickly, and who focuses more on the interest rate over the cost, the origination, the appraisals, everything that one could either take too long or just cost you too much money up front for that short-term loan. Wholesalers use bridge loans too because they're getting more into transactional funding again, maybe some hoteling, but bridge loans are those short-term loans. They might be called a transactional, it may be called a hoteling loan, but it is really a bridge loan. It's just a short loan bridging a gap, like in a transactional funding. They just need money for one day until the buyer's money comes into the title company. That's where bridge loans work. And when you're looking for wholesalers looking for bridge loans, what you're really looking for is someone, again, who's not going to overcharge you and is going to give you 100% financing. That's where focusing on hard money. In the cash flow company, we have different resources. We have DSCR loans, and we have traditional loans, and we have blanket loans, but we also have the flexibility of using hard money to do transactions like this where that bridge loan has no money requirements out of your pocket or has lower points, something that you could pay off quick, pay less, and actually put nothing in it. That's where a true bridge loan on transactional is something you have to look at for having the right lender in the right position. If you have a question on a bridge loan, there's 3 ways we could help you. You could either email us with a specific deal, give us a call, or just join us. We have a call-in session where people call in with different deals, and we go over those deals, how we can help them, and maybe you could even see how other people are using those. So reach out to us. We're always here to help you become the most successful real estate investor you can be.